Hey, good afternoon. George Cavaligos for HFT Bonds. Not a big fan of FOMC days in trading, that's for sure. Couple little trades early, scratch. The one trade I did after the FOMC statement, I got in too early and ended up getting stopped out right where I probably should have been selling it because I was too impatient. And now we're looking at the market breaking down here in the afternoon, led by the ultra bonds and the bonds. Actually, the ultras broke their uptrend. The bonds are trying to hold their uptrend right now. 147.06 on a closing basis would be a broken uptrend. It would start targets, back down to these previous lows, 146.20 and 146.05. We'll see if we get some follow through. Equities are trying to bounce a little bit. The S&P closed down 1 on the day and the NASDAQ closed down 8. Felt like they were down a lot more than that the way they were scrambling to buy bonds and notes earlier this morning. Really choppy day, messy counts. I'm not sure, was that higher high in the 10-year and then back into the range. The Wyckoff analysts would call that an up thrust. Again, we've spoken about this. Failed fifth waves. I call them C waves. We hit that top and then the market started breaking, kind of choppily, obviously. I tried to sell it once or twice in there, basically got stepped out. Now I'm thinking overnight sessions have been kind of weak. I'm hoping we can get a bit of a bounce here in the overnight session, anywhere up towards 11 in the 10-year or back up towards 13 in the bonds. I think if we can bounce from here, we could probably put a short on there with a better stop loss level. I did buy some more TBF. It broke out of a bull flag. I think that was similar to the trend line that we saw break in the ultra bonds and get tested in the bond futures right here on the close. So I will try to sell a rally tonight. I think the market will be looking a touch weak. Tomorrow is the 25th. Stock Traders Almanac has put a piece out. I wish I could, or not this, the Commodity Traders Almanac, excuse me, has a piece that they put out. I'm trying to track it down, saying that historical patterns say you're supposed to buy equities on the 25th of October. Some of the other cycle stuff kicks in on November 1st, and then there's a lot of other little minor cycles over the next week. I'm wondering if bonds are giving us a little bit of a heads up here, being the first one to move here. It's usually the dollar index that moves first, but the dollar index closed unchanged today after making a higher high, so you have a bit of a doji there. Maybe that's something, a little bit of a change in character. I think the dollar index has rallied 5 days straight. Hasn't made a huge gain, but like the bonds and notes, we've basically chopped sideways to higher for 4 or 5 days, didn't make a huge gain. And now, once the cycles or the corrective patterns are ending, the market's starting to break down. I think the bonds are starting to break down here. I think you want to have shorts on here. That's why I keep kind of pushing the TBF trade. You can avoid the little intraday wiggles. Makes me a little more comfortable be long TBF than be sitting here looking at, a short position in the notes with the market 2 ticks in your face. I shouldn't worry about it that much, but I'm still working on the trading thing, obviously. As it's almost been a year, actually. Halloween, that was the MF Global blow up, and my anniversary of coming in here and trying to become a full-time trader. So that's it. Learn something new every day, always. And I think the plan is laid out. 132.06. I'll definitely have a stop below that trend line in the 10-year tonight, and any kind of a bounce back up towards 11, I will be putting a short on in the 10-year there. So that's my plan. Not much else to add. Have a great night. Thank you very much.